Hi guys, welcome to the Thinking Crypto channel. I hope you're doing well. On this channel, we cover the crypto news and we interview many of the folks who are building and investing in the crypto asset class. Heads up, I interviewed Brett Tagepal of Coinbase. He's the head of institutional coverage at Coinbase. We had a great conversation. That interview will be live on Monday, so hit that subscribe button with the notification bell. We touch on a lot of topics such as the hedge funds and the pensions and the endowments and all the wealthy individuals that are leveraging Coinbase custody and the demand they are seeing. It's been growing. So it's a very insightful conversation. So make sure you hit that subscribe button, guys. Hit the thumbs up button. Let's get to over 500 likes and leave a comment below. Guys, Grayscale says Bitcoin market looks like 2016 before the historic bull run. Now, to give you context, 2016, specifically July 2016, we had a Bitcoin halving, right? If you look at the chart, a Bitcoin halving took place in that period, and we've seen after each respective halving, you have a bull market, and that is what we are currently in. We're in a bull market because the third halving took place in May of this year, and we've seen prices increase, right? Bitcoin has been working its way back up. It surpassed 12,000, had a correction, but we know that's how the cycle runs, right? You have your pumps and your retracement, higher highs, higher lows. And if you look back at July 2016, the prices were around $600 to $700. As you continued into August, it dropped below 600, but then it started working its way back up. By the time we reached December of 2016, we were near $1,000, right? Slow, steady growth. And into 2017, we saw continual growth. It started going to $1,100, $12, $13, $14, then it crossed $2,000, and then all the way up to October, it was at $6,000, and then we saw the major pump, guys, to near $20,000 in December 2017. So as you can see, over a year, right, the process took to get to that parabolic run up. That's why patience is so important. And Grayscale is essentially saying that it looks very much like 2016 in the anticipation that there may be a parabolic run up next year. You guys have seen my interview with Dan Moorhead, CEO of Panthera Capital. On the interview, he said he's expecting around $100,000 or $115,000 Bitcoin price in August of next year. So that will be awesome. Grayscale notes that long-term holders are increasingly dominating the Bitcoin markets over short-term speculators, driving demand relative to supply. And that is certainly the theme right now, because we see people are using Bitcoin as a safe haven, as digital gold. We just talked about MicroStrategy putting their cash reserves into Bitcoin to preserve the value. We see George Ball, a Bitcoin opponent, capitulating, saying it's time to buy Bitcoin. We know about Paul Tudor Jones. We know about all these other major investors getting into the market, guys. And Goldman Sachs just recently expanding their crypto division. So Grayscale predicts that demand for Bitcoin will significantly grow as inflation accelerates, highlighting the need for a scarce monetary commodity, bolstering the use case of the cryptocurrency. The report identifies several on-chain indicators showing growing interest in crypto, noting an increase in long-term holding over short-term speculation amid historic lows for the number of Bitcoin held on exchanges. So this is really, really bullish, guys, and I certainly see higher prices next year. Will we see the parabolic run up in December 2017? I don't know. That's like saying I know what the lottery numbers are going to be next week, right? But we can look at the past historical data, and we can at least attempt to say, hey, based on the facts, we could see higher prices next year. And I think the probability is very high, not certainty, but probability is very high. We see higher prices. Will we see all-time new highs or higher prices? I don't know, and that's the key. But there's a strong probability of it, right? So I'm certainly bullish on Bitcoin. I hold other cryptos like XRP and Ethereum. Bitcoin is really the mover of the market, whether you like it or not, whether you love or hate it. It is the mover of the market right now. It's the brand that's well known. But all the puzzle pieces are coming together, guys. Based on all the news we've been covering, all the people I've been interviewing and sharing the news with you guys, Grayscale continues to buy a ton of Bitcoin. Like I said, George Ball, and what we saw is Warren Buffett decided to move his money out of stocks into gold, and that's a big capitulation there because he was anti-gold for a long time. It shows that people are going to move their assets into like Bitcoin or crypto, which are more safe, right, and have potential a large upside. So very excited for the future of the market. And something interesting here coming from the IRS guys, the IRS plans to ask every American worker if they use crypto in 2020. And of course, because crypto is becoming a growing investment asset and people are putting into their portfolio, they may have made purchases with it, those who have enough crypto, but they can do that. Every American filing taxes for 2020 will have to tell the IRS whether they use crypto this year, according to new drafts from the tax agency. Early into its very first page, the latest 1040 form asks, at any time during 2020, did you receive, sell, send, exchange, or otherwise acquire any financial interest in any virtual currency? Chetan Latha, founder of crypto tax software firm CoinTracker, told Cointelegraph the cryptocurrency question is now front and center on the IRS Form 1040 for the next year. Pretty clearly shows that the IRS is taking cryptocurrency taxes even more seriously. Of course, they have to. People are putting their money into it. When you have companies like, for example, MicroStrategy saying, hey, we're putting $250 million into Bitcoin, and Paul Tudor Jones saying, hey, 2% of all my assets, and I'm a billionaire, I'm putting into Bitcoin. Of course, they're going to start doing that, and they know people are moving away from traditional investments into crypto. So let's see how things progress, but this shows the adoption that is taking place. The governments, the IRS, the different regulators can't ignore crypto anymore. It's here to stay, and that's why I am so bullish on it. Everybody's capitulating. Governments, institutional investors, corporates, all these guys who were anti-Bitcoin, the Jamie Dimons and so forth, they now are capitulating, and that is bullish as hell. And be patient. I'm continuing to buy the dips, not financial or investment advice, looking at where, when we have a pullback like we currently are seeing, and buying the dips. I'm primarily, just to give you guys a heads up, I'm primarily buying Bitcoin, XRP, and some Ethereum. I'm also, because I've been swing trading the hell out of Chainlink and making money there, I've been buying Chainlink at prices like, for example, I bought some today at the $14 mark, and I'm going to, if it goes back up to $19 or $20, boom, swing trade it, made some nice profits there, right? I am holding some long term, just to be clear, because sometimes you have the Link Marines coming, you're an idiot for selling, man. You're just going to go to 10 grand or something, right? Yeah, like that for a fact. I'm cashing out on the way up, playing smart, playing the conservative part of this. I've recouped my initial investment. I've taken profits, so I'm playing with house money. And that's why I don't lose sleep at night, because I'm playing it conservatively, smart, making money, and not trying to be super rich overnight, right? But I do believe the next parabolic run-up will make me super rich along with many other people, but that we have to be patient. So guys, what do you think about this news? What do you think about Grayscale's report here saying that it looks like 2016 and next year could yield some significant higher prices? And once again, it's data driven. It's not just like making it up or pulling it out of their ass, right? They're looking at the halving chart and the supply and demand from institutional investors here. So guys, what do you think? Leave your thoughts and comments below. Thumbs up, share this video. I'll talk to you all later.